G'day traders, Stacey Burke from Stacey Burke Trading. Today we're talking about mastering your trading process. What can you reproduce in live time? And this is key because I think it's critical that traders, again, it's a mindset reprogramming, getting yourself away from all the retail textbook, regurgitated fluff, and getting into reality. And reality is what can you do in live time. And I love this comment from a trader. That's great in hindsight. Real professionals give analysis and predict, and that's a load of rubbish. I have no idea what the market is going to do, and I say this over and over again, and it's amazing how many traders are seeing this and sending me their trade results and their screenshots, and they're nailing these trades. Why? Because for years they've probably struggled and tried the same things over and over again, and then they're getting clarity and also stepping away after they're getting winning trades and locking in profits and psychologically preserving their capital and everything else. The smart trader wants to make money. And I said this yesterday. Ed Sakota says every trader gets what they want from the market, and that really sinks in when you start to see this and recognize there's an entry-exit strategy, and there's thousands of those, and they all produce results at certain times. But then there's the other equation of the trader themselves, and very few people actually work on the real things that are going to impact their trading. So, this is free information. I've spent hundreds of thousands of hours and dollars learning, and if you don't like it, it's okay. But don't tell me what you want from me. I'm giving you this information for free. I love doing it. I love the markets. I love the fact that it's a game of constant progress, and never once have I said this was easy. People say, oh, you make it look so easy. Well, spend 15 years getting your teeth kicked in, and then tell me you either learn something and you stop doing self-sabotaging behaviors and everything else and blowing up accounts and losing thousands of dollars and sitting in a corner crying. If you don't learn something from that, then, after 5 years of you studying retail, coming along and saying to me, oh, that's great in hindsight, well, don't follow me. I mean, that's I could care less. I've paid the price. I have paid the price. And every day it's still a battle to make sure that I don't do anything stupid, to make sure that I'm on my game, to make sure that I don't get greedy, to make sure that I don't get impatient, over leverage, average into a loser, move my stop, all those things. So give yourself a little bit of a, space to kind of grow and learn here. And I've learned from some great traders, and I don't hide that. Everything that I've learned has just been piecing together things over time, over and over and over again, relearning and making mistakes and relearning and making mistakes and being resilient. And it's still I'm always aware that there's a potential danger zone headed in front of me. And it's a constant reminder that this is you don't ever reach perfection. So today, talking about refining your process, mastering your process. We've talked about timings: Asia, London, New York time. Just to type this in. So just to come back, I'm just hammering home the facts. New York time. So if I say that the equity market in London opens up at 3 a.m., whether it's daylight savings time in London, they've changed or not, I'm just going to say that New York time is how everything runs, and it's amazing. Even when London hadn't changed, the market still moved in that middle hour. We're going to look at some setups today. If you don't see these trades in live time and you're sitting there going, well, how did you see it in live time? It's great to post a chart afterwards. Well, you're going to see two trades that were exactly the same, 2 sessions in a row in the middle hour. And if you didn't get either one of those, you should print these off and study them and actually go bar by bar and look at the timing of them and everything else. Critical for your learning. High and low a day, it's a fact. If you don't know where that is, the previous day's high and low is your reference point. If you don't break one of those, then wait. Wait until there is a definable high and low set up on the current day. You need to build a playbook. You need to know what a trend setup looks like so that you don't counter trend it. You need to know what a reversal opportunity looks like and a trading range. And they may be similar, but you may be inside of a high or low inside of a trading range. And that trading range trade may actually change into an explosive trend trade if it's a squeeze. Little things like that. If you're not seeing this in live time, then you need to print these charts off. Now, the other thing that I've talked about is I use 1-minute charts. Now, I use those 1 minute charts at the session opens at the highs and lows. So if you're not seeing these and you're using 4 charts of 4 hour, 1 hour, 15 minute, and 1 minute, and you're trying to line all that up, you're probably never going to see it, because you're never going to see a 1 hour or a 4 hour trend line up if it's a reversal trade, and it's going to be a minimum of 15 minutes before you even recognize it on a 15-minute chart. So these are all the little things that you have to take into consideration and know if you're looking for these opportunities at the high or at the low, that multiple time frame analysis will often keep you lagging behind these trades. Don't guess. Know what your setups look like. So again, I find it very, very condescending from somebody who would say that looks great after the fact. Well, again, spend 20 years studying this. I hope you learn something after 20 years, and then I'll come along and say the same thing. Oh, that's great, you got lucky. Well, it's not luck. It's been hard work and a lot of painful mistakes and a lot of painful learning. And I can relate with every single trader out there who is doing this and getting better and still having setbacks. It's perseverance, and that takes a lot of resilience, and I respect that. So I don't take any of this other stuff on board. I am quite willing to, here's the bottom line. At the end of the day, I want to put money in my account. I could care less what you think. I want other traders who are on that same path, who are hungry and who are have a force of will to succeed at this, that they do that. Manage your risk. That means place a stop. It's as simple as that. I talked about this yesterday. What's your max stop loss? Whatever that is, place a stop. That's the bottom line. That's as simple as I can say it. Take profits, lock it in. Gold is a textbook example of that. Yesterday, we had some explosive moves in all 3 sessions, and that market moved back and forth inside of a 100-pip box. So traders could have been up 100 pips and not taken anything and had the popcorn trade where it came right back to where they were. They might have walked away and not locked anything in, and it stopped them out at break even. So these are all the little things, again, that you can learn the hard way, but the smart trader wants to make money. They lock in the money. They don't care. Somebody could say the market is going up, and they might have shorted it and made money, and they walk away, and they could care less whether or not their analysis of the market going long or anything else mattered. It's whether or not they had a setup. Did they execute their trade? Did they manage their risk? And did they lock in profits? So manage yourself. Walk away. Lock in the money. Walk away. Don't keep trading unless you are, in a situation where you have the expertise to do that and you are in a good market to do that. Otherwise, I would suggest to lock in the money, walk away, come back later, study what's happened in the gap if you want to, but lock in the money and keep it in your account. It is a challenge every single day, no matter how good you are. And nobody will ever, if there's people telling you how easy it is and everything else, well, maybe they're running an algo, maybe they're not really trading. I'm telling you the truth. It is hard every day, but the longer I do this, I recognize where I am the issue. I'm the problem. So don't do stupid things. That's my golden rule every single day. Don't do anything stupid today. Start to refine your process so that you can identify these best stress-free setups in live time. And I'm going to emphasize this over and over and over again. Timing. Let me say this, and just take a second so that nobody says hindsight or anything ever again. Timings. Study the time of day, and you will improve immensely. And then lastly, review your trades and have an actionable review process. An actionable review, meaning that don't just comment about the trade itself. What are you going to do that's going to make you better? So this gentleman out there who's saying it's all hindsight, and if you're missing these trades, what are you doing today that's going to ensure you're not going to miss the trade? That's my question for you. What are you doing that's going to ensure you don't miss a trade today? So we looked at this trade. I'm going to go through some textbook trade examples. You can print these off, put them, go mark up your own charts. I know there's several traders who emailed me who nailed both of these, the Asian and London session. So again, timing. I mentioned this was the first 15-minute bar of the new middle hour, the second hour. This market came down and put a pin in place. They hit the previous day's low, which is refined by this dotted line, the blue one. I'll mark it off. This was the previous day's low. So there's our first trigger. It's a trigger. Do I know that this is going to go back up? No, but they gave me a 3-bar reversal at the low, at the timings. This was 6-7 minutes into a 15-minute bar. And I've talked about this in several videos. When you're 7 minutes in, that's halfway in a 15-minute bar. If that market reverses, guess what that turns into on a 15-minute bar? It turns into a pin hammer. So you're at the low of the day after triggering the previous day's low. That hits stops, that triggers breakout traders on other time frames. But also we have low-hanging fruit. Notice how they came down lower into the beginning of the session. They dropped it down before the 12-candle window began. What that does is it gets traders chasing the trend down low. And I know there were traders who messaged me saying they got stopped out. So depending on where you got in, if you're chasing this down low, there's a lesson there. If you're selling it down here, you're selling into the low. You got to be at break even if you violate the low in the new hour. If you sold it up here, you should be looking to grab some pips and take it off as we get into that new 15-minute bar. So again, studying timings. This market came up and exploded, went right back to the high of the day. Excuse me. So there's a 50 pip trade. Yes, it went further than 50 pips. I didn't care. I just was like, okay, there's an explosive move. It could have reversed at 50 at the quarter level and came straight back down 15 pips into that move up. I had a target set. It exploded. My thesis was that it would at least take out the low-hanging fruit just above the quarter level or go into that level, and bang, it was done and over with quickly. Okay, so go back and go scroll through gold and see how often this setup shows up, and then tell me that was hindsight. If you don't have this chart in your playbook, print it off because you will see it again. Now, we went into the London session, and lo and behold, they did the same thing. Okay, so where's our high and our low of day? Okay, we have a high of day. It's up here. We have a low of day. It's down here. Some traders I know shorted this into the open of the session, and they made pips. They locked it in. There's nothing wrong with that. They had a triple top. They brought traders up with the pump and dump. So again, the pump and dump in the last 30 minutes heading into the session open. If you're not sure what the pump and dump is, go back and watch the other videos. 1 push, 2 push, 3 pushes, engulfments. In the third level, we're above 75. So again, we talked about that in the other videos, 3 levels of rise. And then they've shorted this, but they also took money off the table. Traders who waited for this to come down to the low of the day. The second hour, London opens up and goes vertical and hits the stops. We get a 3-bar reversal engulfment, pin hammer. I know there were traders who bought the pin hammer. There were traders who waited till we got into the third 15-minute bar, back inside the previous day's low. We have 1 push, 2 push, 3 pushes back into the breakout, and a little pin hammer into the third 15-minute bar for an explosive move back up. Now, traders who have traded this before also recognize that when this went sideways, this was entering into a parabolic move. We came out of level 1 from the trade, 3 levels down at the low of the day. Do not counter trend a level 1 or a level 3 trade once that move starts. You've heard me say that before in previous videos. I will say it again. This trade was a long trade out of level 1. Don't counter trend it. Once the equity hour reverses and it's going, whether it's the second hour or the third hour, once that move starts, do not counter trend that move. If traders are up here looking for a reversal at the high of the day, they're caught in a trending market that goes parabolic. That will blow your account out. Very important to understand. So again, exact same setups, 2 sessions in a row. A vertical move to the low of the day in the middle hour for an explosive move back not only to the high of the day, but through the high of the day, which was a stop hunt on the previous night's U.S. session shorts. This market then proceeded to go up in the hour outside of the 12-candle window and give us an M formation. I've said this, don't counter trend until the market goes into consolidation. The market spends an hour up here before breaking down, pulling back, breaking down out of level 3, a level 3 consolidation. If you're not sure what level 3 is, well, I talked about the 100 pip boxes. This is sweet spots. Again, go back, watch the other videos. There's tons of videos about sweet spots. It's just an indicator that I've marked off. Double zeros, 75, 50, 25, and double zeros. 4 quarters. They locked it in the upper quarter. If you sold up here, you're selling up high in the 100 pip box. I've talked about that in previous videos. This market then proceeds to auction all the way back down into traders that were long. So again, the importance of taking profits. This pattern is called a half Batman. So if you didn't take any profits and you're up 100 pips, learning lesson, lock in the profits. This market comes down 3 levels and puts in a peak formation low and pulls back above the double zeros. If you're on a 15-minute chart or a 1-hour chart and you're using indicators and everything else, this is a downtrend now and you're shorting this. First 15 minutes of the U.S. session, again, I have talked about this, will often put in a high or a low, and that traps traders in the wrong direction. They trade short into the low and reverse when? On the second 15-minute candle, the second 15-minute bar. This gave a long signal for traders, peak formation low, into the peak formation low, 1 push, 2 push, 3 pushes, pulls back inside double zero boxes, goes up, gets breakout traders long before going down and putting a low in place and reversing. Again, traders went long. They captured 25 plus in an explosive move. I know some traders just took this and shut it down. They were happy with that. And I think that's a great, there's nothing wrong with that. That's perfect. There were other traders who re-entered into the New York Open. I spoke to a gentleman yesterday where if you're in early, so I consider this one trade. Once that trade is complete, I wait for the New York session to begin. Unless it's gone 3 levels and it puts in a peak formation or a reversal trade at the beginning of the second hour. This market opens up in New York, takes traders higher back up to traders that were short, okay, in the gap time. They take them back up one more time. We get 3 pushes to the high. I talked about this in last day's video, the break in structure, and then the revisit to the high in 3 pushes and a vertical trade back down. Double zeros were outside of the double zero box, peak formation and an M pattern at the high for a vertical 50 pip move. Now, traders, again, if you don't have this in your playbook, screenshot this, study the timings. This happened on payrolls Friday, and this happened on Monday. So very important to print these setups off. Now, let's take a look at some of the other major pairs. The Aussie dollar had RBA on Tuesday, and I know some traders messaged me. They were stocking this for the 3-day setup. Again, they reversed it on Tuesday night after going vertical. We have our M formation at the high of the week. We had trap volume yesterday. They were licking their lips, waiting for the U.S. session, knowing that we had a opportunity for low-hanging fruit and a vertical move. So we had the Fed late after that. They knew that. They took money off the table, but this is an easy trade. This is an easy trade. The market broke down Tuesday night after going vertical on RBA. Okay, where do you think they're going? Somebody's in the money here, or they're holding on in the long trend. It broke down. They set a high, they set a low, they traded back up into the high and broke down in the gap from London. They went sideways, a peak formation into the high. Print this off. This is should be part of your playbook. This is using the news calendar to your advantage and not trading the news, recognizing that they took traders up high in an explosive move at the high of the month, brand new month, and then they went into consolidation underneath the peak formation. So there were traders I know that shorted this in the Northern Hemisphere, and then there were traders yesterday that shorted this. They were waiting for the second day trade. So if you don't have this in your playbook, print this off. You're going to see this again. Major news will often do this. So this is not hindsight. Traders are going there prepared with a thesis. I want to see the sell. What do I want to see in that first hour? I want to see them pump it up. Pump, 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 and then sell it. Whether you're on the 1 minute, the 15 minute, we're pumping up into the high of the day. It's already locked in. Peak formation. They trade back up into it. Peak formation. Lower double top. It breaks down. They trade back into the lower double top for an easy 25 to 40 pip move down before the Fed. Now, if you didn't take money off or you were at break even, they might have took some off and left a trailer, whatever that may be. I usually, I'm not up for the Fed, but I just have no illusions that the Fed can go vertical and clear out both sides if it wants to. That's not hindsight. That's being prepared with a trading setup, going to the screen, a second day trade. People forget about it. Oh, the move's over. I missed it. They missed this. But the smart trader's waiting because the big run's over, and they know there's money sitting down here. There's people caught long, and all it's got to do is fall through that. They did the same today. Look at the low-hanging fruit. They just dropped right through. So Again, the difference between the smart trader, they go there prepared with a plan. The other traders just want to do analysis and be right. There's a big difference. Obviously, the New Zealand dollar moves very similar similar to the Aussie dollar, and of different variations. So again, an opportunity to learn and see a variation in the playbook. The market traded back up through the high of Asia, but again broke down in the gap, pulled back, and gave a nice engulfment right at the beginning of the U.S. session at 50 in a broken down market. So these lows are low-hanging fruit. Didn't go quite as far as the Aussie, but again, an easy, no-stress trade. You're in an existing broken down market. They cleared out the lows from the vertical move up in the Tuesday night, but then yesterday's high and low set a trading range that gave a consolidation. They traded back up through the high. They gave the extended M pattern. They broke down and continued that move into the U.S. session, into the Fed. NASDAQ gave traders and U.S. 30 traders some vertical moves in London yesterday. Again, just simple, broken down market. We had a first red day on Tuesday. The market then went into consolidation, put in peak formations between double zeros and 50, just below double zeros and 50. The market triggered the previous day's low. I like the U.S. 30 setup myself better. The NASDAQ can be a bit volatile for traders, but again, it traded up into the high of the day, and we see a three-push pattern. It breaks down into the open of the London session. So again, the middle hour, London equity market open. So we have a high locked in. They trade back up into the high. Okay, so an example of, there's the high. They've already violated the high of Asia. They come down, they break structure. So again, I talk about the ramping of price as a giveaway. This is trapping people higher and higher. So again, hindsight, no. Understanding what's happening and looking for a setup. I have a line at the quarter level. The first thing I do is I draw my level. Did they lock in the high? Okay, well, if that's 25 pips up, that's at least a 25 pip move. Do I have trap volume? Absolutely. Is there a ramping of price? Yeah, that's trend traders trading in the version of they think this is a trend. It breaks structure. The equity market opens and trades three pushes back up, consolidates engulfment for the vertical move. So print these off, study them, look for the different variations of them, understand what a setup looks like, understand the exact timing. The time of day is so critical, so important, whether it's on a major pair, whether it's on an index, whether it's on a commodity. They all respect time of day, and they all respect price levels, and they respect the high and low of the day. Those are facts. There's nothing we can argue about. If it's 9:30 in New York or 3 a.m. in New York when London opens, it's 3 a.m. It's as simple as that. So at 3 a.m. you should pay attention. And if you're not at the high or low, have we already been to the high? Are we trading into the high? Are we going vertical for a stop hunt? Is that stop hunt a breakout, or is it a reversal setup? Simple things. Build your playbook, study it, master your process. Again, that 12 candle window. I'm looking for my setups in that 3-hour window, and I'm expecting that I'm going to get at least one good setup. And if I don't, you have to manage yourself. You have to be willing to walk away. You have to be in control of your emotional state and not be there trying to prove anything, trying to be right. You're there to execute. You're there to execute your trading setups. That's it. Execute your trading setups, manage your risk, lock in your profits, and then walk away. Once they make that vertical move, there could be some other continuations, but it could also go into chop. You can try and get more. Maybe you're holding on. Maybe you're just managing the trade, a portion of that trade, whatever that may be. Master your trading process and master yourself. Have a great trading session today, and may the markets.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.